Hi students, welcome to Computerized Accounting, Accounting 1115. All right, in today's video, we are going over Chapter 5 in your ebook. Chapter 5 in your ebook, we are discussing purchases and cash payments. All right, so we're continuing with the recording operating activities. So in Chapter 4, we talked about sales and cash receipts. So in this chapter, we're talking about purchases and cash payments. So what we're going to do first is we're going to talk about how to add a vendor. Then we're going to talk about recording a purchase order, how to record a bill for the receipt of products or services on account, record the payment of bills, record credit card charges, checks, and then of course prepare our trial balance. All right. So I see up here, you see my sample company, my case one company. So I'm going to be doing case one with you guys. That's done. This is part of your homework assignment. As you guys have learned, each homework assignment is a continuation from what you did prior. All right, so see here. So if we look at step one in case one, it says to add a new vendor. So when you want to add a new vendor, there's different ways you can add a new vendor. You can basically come over here where it says expenses and click on expenses. And you'll see up here you have expenses, bills, vendors, contractors. So we're going to click on the vendors tab. So here we see, we only have one vendor so far. All right, and we currently have a payable set up for that vendor. If you remember correctly, we set this payable up when we did our journal entry back in chapter 3, case 1. All right, so we are going to be adding some vendors. So how do we add a vendor? So we come over here and we just click the new vendor tab. All right, so the new vendor we want to add is called Stewart Surfboard. So it doesn't give us a name, it just gives us a company name. So we will just type it in as it says here. And then we can scroll down here for address. It does provide us an address to enter, and it's 2102 El Camino Real. And see here, San Clemente, California. All right. So that's all the information it's provided us. Now, I want to kind of show you something up here. If we had like a person's name to add as well as a company name, that would give us the different options. So the vendor display name is important because when we go to cut checks, if we are doing that, if we're cutting checks, if not, that's the name that will show up, name to print on checks. But let's go down here and let's look at it. We also can set up ACCT payments in QuickBooks. Now we're not going to be doing that in this class because we're not doing real world payments. We're just doing, pseudo. But we do have, you do have the options. We could do ACCT payments. And what is an ACCT? Some may or may not know what ACCT is. ACCT stands for Automated Clearinghouse. It is a way of doing electronic fund transfers. All right, so this is usually your direct deposits, your direct bill pays, etc. These are done via ACCT. You would also want to put in additional information. These would be like if it's a company or a person that you're paying, you want to put in their tax ID information, and then any other information that would be pertinent. All right. What is the terms? All right, so this is a vendor. All right, so this vendor, when you set up a payable with this vendor, they probably have credit terms. So you would probably want to select your credit terms with this vendor. Net 30 is the most common credit terms. It means that your bills are due 30 days upon receipt. Okay. So once you got that information entered, you go ahead and click save. So that's step one completed. So now we can see we have Stewart Surfforce has been added. So we go into step two and wants us to add yet another vendor. We're going to actually be adding about 3 vendors. All right. So I'm just going to quickly go through and add each vendor based on our homework steps. So right now I am doing step 2. All right, and now I'm moving on to step 3. Again, what is a vendor? These are companies that we have set up accounts with that allow us to go ahead and charge products or services to an account, extending us a line of credit where they will invoice us or bill us at a later date. So here we will be creating accounts payables for these purchases. So this is what we're doing here when we're creating vendors. We're putting vendors in the system that we are going to be doing business with on a regular basis, whether we have credit terms with them or not. We'll be doing business with them on a regular basis. All right. And again, the vendors are the companies that we purchase from. Okay. Not our customers, our vendors. So the difference between a customer and a vendor. Customers are those who come and purchase products or services from us. Vendors are who we purchase products and services from. Make sure we understand that distinguish between the two. And so since this chapter is talking about purchases and cash payments, that we'll be dealing more with vendors. Whereas last chapter, we talked about sales and cash receipts. So we talk more about customers. So by the time you finish step 3, you should have a total of 4 vendors listed. Okay. Next thing we're going to do is we're going to add a new account. All right. So let's talk about this for a minute. All right. Now, again, let's see here. All right. So the step 4, what we're doing is we're going to be creating a new account type, which is credit card. Okay. All right. Now, credit card is going to be a little tricky in this chapter. So I want you to pay attention to what we're doing in this chapter when it talks about credit cards. Okay. And I will discuss that when we get to that step, but I'm just giving you a heads up right now. When we talk about credit cards, it's a little different. Now, credit cards are just another form of an account payable. All right. So it is going to be, it is a type of liability. QuickBooks does have it set up slightly different because it does actually allow you to track your credit card charges and payments and maybe even reconcile it against your credit card statement kind of thing. But I want you to understand that as far as accounting, financial accounting goes, credit card charges are another form of a payable because it is debt. Remember, so it is a liability. So let's go down here to accounting and click on our chart of accounts. And we're going to click on new because we're creating a new account. All right, so it does have its own little section up here that says credit cards. And we're going to name it Visa. All right, so it says here, add a new account. The account type, credit card. Your detail type, credit card. and the name is Visa. We're not going to do anything else at this time. I'm just going ahead and click save. All right, I just want to scroll down. Just looking at our various accounts and everything is looking good. That's all I'm trying to do at this point. All right, now moving on to step 5, we're going to add yet another new account. So let's go ahead and click new again. And this time what we're doing is we're creating an asset account. So let's remember, we got to go back to financial accounting 1 again when we talk about supply assets. All right, so when you go to purchase supplies, when we initially purchase supply, we record it as an asset. As we use the supplies in our daily operations, at the end of the month, we'll do an inventory of our supplies. And whatever supplies that were used during our daily operations for that month, we expense it to our supply expense account. So our supplies start out as an asset. And then once we determine the amount of supplies that was used in the month, that amount that was used, we do an adjusting entry where we reduce our supply assets and we record it as an expense, specifically a supply expense. So hopefully you guys remember doing that in Financial Accounting 1. It was one of our adjusting entries that we did. Okay, so it is an asset. It is considered a current asset, so we're going to specifically choose other current assets. All right, so we could scroll down to other current assets. And our detail type is going to be, yet again, other current assets. And we're going to name it supplies assets, just like I wanted to in step 5. Okay, so we're going to click save. All right, now, so we have that account set up. Now we're ready to move on to step 6. All right, so step 6 is having us add some new products. So we go up here to our gear icon, and we come over here into list, and we're going to select products and services. All right, so here we can go ahead and select new, and we're going to select inventory. So the name is going to be the California Nose Rider. So it's a type of surfboard. Our initial quantity on hand is going to be 0 as of January 2nd, 2024. All right, we'll make sure that it's recorded as an inventory asset. All right, then our sales price. And our sales price is $4,200. And we want it to go to sales. And then the cost is $1,700. And we make sure it goes to the cost of goods sold. So let's talk about these accounts again. I'm going to really try and drive this home for you guys so we really understand the accounting of what we're doing. What is the accounting that we're doing? So as you know, when you purchase inventory, okay, when you initially purchase inventory, it's going to go to your inventory asset account right here. That's why I always want to make sure this is what's selected here. All right, so when you initially purchase inventory, it's going to go to your inventory asset account. All right, and it's going to go under the cost. All right, so it's going to record it at cost. Okay. All right, so when we go to sell, so the purchase of your inventory is always going to be a debit to inventory asset and then a credit to either cash or accounts payable. Okay. All right, and it's going to be recorded at cost. Now, sale transactions. So now let's say we sell one of these items. All right, so that becomes a four-sided entry. So initially, so we're going to record the sale, and of course we're going to record the sale under the sale price of $4,200. So the debit is either going to be cash or accounts receivable, and the offset is going to be our income/revenue account sales. All right, so we'll debit either cash or accounts receivable, and then we'll credit our revenue account sales for the sales price of $3,200. All right. The other side of that four-sided entry is now we're going to reduce our inventory asset account. All right, and then we're going to record it as cost of goods sold, which is an expense account. So what we're doing is like, so when we purchased it, we debited inventory asset, increasing our inventory asset. When we sell it, we have to then reduce our inventory asset. So we debit our expense account, cost of goods sold, and we credit our inventory asset account at cost. So that's the four-sided entry. So for the sale portion of the transaction, we debit cash or accounts receivable and credit our income account sales for the sale price of $3,200. Then we debit our expense account cost of goods sold and credit our inventory asset for the cost of it, reducing our inventory on hand. Okay, so that I'll make sure I'm really making sure we understand the purpose of these entries right here. Okay, so number 7. All right, 7, we're going to add one more inventory item. All right, and the name of this is just an 808. Again, 0 quantity on hand. Date is going to be January 2nd. All right, so we make sure we have our inventory asset selected. So here the sales price is $2,700. Let's change that to sales. And the cost is $1,500. And we make sure that's going to cost of goods sold. And go ahead and save and close. So we've added 2 new inventory items. Now we're ready to go to step 8, and that is to record a purchase order. So this is really new to us. Okay, so what we've done so far, we've added vendors before, we've added inventory items before. So now we're ready to start on the actual new items that we're learning, which is a purchase order. So a business uses purchase orders to formally order products or services from its vendors. They are used as a reference as well as a control for the products received. So during the creation of a purchase order, you can create new products or refer to an existing product. So we just added 2 new products already. But you can add products from the purchase order module as well. Purchase orders can be used to acquire inventory for future sales or for products ordered for a specific customer. So let's talk about this. So basically, when you go in to create a purchase order, it's kind of like and what you can do in real world situations, when you create the purchase order, it is sent to that vendor. All right. And then when the vendor receives your purchase order, it's like basically like when you go to Amazon and you build a cart at Amazon and you go, that's kind of like creating a purchase order. All right. And you hit, pay now, you're sending the purchase order. So it's kind of the same concept as when you go to build your cart in Amazon. A purchase order is kind of like that same concept. You're sending a purchase request, an order, all right, to that vendor. And that vendor receives that order and they fulfill that order and they send you the products that you order along with a bill. Okay, so that's kind of like how the purchase order works in the real world setting. So let's talk about how we actually create a purchase order in QuickBooks. So to create a purchase order in QuickBooks, we just go over and click the plus new. All right, and under the column that says vendors, we'll scroll down to see where it says purchase order. All right, so here we have the screen set up. All right, so in step 8, it says record a new purchase order for products on January 2nd. The vendor is going to be Channel Islands, and then it's listed several items that we're going to be purchasing from Channel Islands. So the first thing we got to do is we got to come over here and select our vendor. All right, so notice when I hit the drop down menu, only vendors show up. Only vendors show up. Okay, so we're going to click that. All right, now here you can change things. If you want it shipped directly to a customer, you can change information here. Otherwise, it'll come to the whatever address you have for your business. We do need to change the date. It says to use January 2nd. All right. Now, on a purchase order, we see we have 2 categories. We have 2 details. We have a category detail and an item detail. Okay. Category detail are for your operating expenses. Okay. So if you're, for whatever reason, creating a purchase order for operating expenses, you would use category details. So maybe if you're placing an order to Office Depot for some office supplies, okay, you would use category details. Item details are when you, and specifically for when you're purchasing inventory items. All right, so when you click on category details and you come over here and you click on the drop down menu, you see you have your accounts from your chart of accounts. That's basically what we see here. These are all your charts, your accounts from your chart of accounts. All right. So this is where you would, so obviously, like I said earlier, if you were maybe purchasing supplies from Office Depot, this is where you would use, this is what you would use. Because you would want to use your supply asset account. All right. But we're not doing that. We're actually purchasing inventory items. So let's go down here to item details and click on the drop down menu and see what happens. All right. So when we come down here and click on the drop down menu, only items that we have entered into our inventory show up. All right. So I just wanted to show that to you. All right. So the first thing it has as order is a Fred Rubble. And it says product 1, Fred Rubble, quantity of 5. Now, when you click on this, it shows you how many you have on hand. And here it's telling you have 0 on hand. Pretty neat. All right, next line. All right, so now it's telling us product number 2 is the Rook 15, quantity of 4. We actually have 8 on hand here, but we're ordering 4 more. And then the third item is the Water Hog. And here we're only going to purchase a quantity of 1. All right. So now you have the option, you can email it to your vendor. You can snail mail it to your vendor. To do that, you would just hit save and send. And when you hit save and send, it would automatically email it to your vendor if you had an email address to put in here. You could print it and and then that's when you could snail mail it, etc. But we're just going to go ahead and hit save and close for now. All right, so it says purchase order 1001 has been saved. All right, so we're going to move on to number 9. Let's see here, we have the 808. Let's see how many nose riders. All right, so let's go here to new vendor, to plus new, and we're going to go down here and we're going to do one more purchase order. This time the vendor is going to be Stewart Surfboards. Okay. We're going to change the date to the 3rd. And again, we're ordering items. Now, for whatever reason, not able to see the new items. So let's go ahead and see what we can do about that. Why aren't they showing up? So, so I will have to troubleshoot this and hopefully we can figure out why, because we should be able to see the items that we have just entered. Yes, we're going to leave it out saving. I'm going to come up here. I'm going to make sure our products and services. Because we were supposed to be able to order. Okay. I will troubleshoot this and come back. Okay, just to recap really quickly, I had to pause the video and do some troubleshooting, and I'm going to share with you the issues. So really quickly, if you guys are following along, when I clicked on the drop-down menu for step number 9, the new inventory items we added at the beginning of the assignment were not showing up in the drop-down menu. All right, so if you guys encounter that problem and your items are not showing up in the drop-down menu, first I would suggest you completely log out of QuickBooks and then log back into QuickBooks. If that doesn't resolve your problem, then you have to do what's called clearing your cache. Okay, and that's basically just clearing all your browser history. All right, so I know that may sound like a crazy thing to do, but that's what you have to do if you encounter the same problem I'm having. So if you go to click down the drop-down menu and your inventory items you just added are not there, first things first, I want you to completely log out of QuickBooks and then log back into QuickBooks. If they're still not showing up in the drop-down menu, and then you'll need to go in and clear your browser history. Now I'm using Chrome. So how do you do that using Chrome? You would come up here and then click on more tools and then click on clear browsing data. Okay, so that's what you want to do. All right, now just clear all your cache. Okay. And again, that's just unfortunately an issue that you may or may not encounter using online applications. All right, so let's continue on. So we're ready to do step 9. All right, and I don't mind having these problems when I'm doing these videos because we can troubleshoot them together, and in that way, if you start having the same issues that I'm having, I'm hopefully I've worked out a solution and I can share that solution with you. So like I said, what I did was I started by logging completely out of QuickBooks and then logging back in. If that didn't quite fix my problem, so what I did next was I just cleared my browser history and cleared my cache. So, and that did fix my problem. All right, and again, if you're using Chrome, I can show you how to do that in Chrome. You just come up here to your menu button, come to more tools, and then click on clear browsing data, and that fixed our problem. All right, so now we're ready to do step 9. It says record a new purchase order. So let's talk about how to do that again. All right, because for me, it's been a minute, probably not for you. So how do we do a new purchase order? We come up to the plus new function. Under vendors, click purchase order. Okay. And our new purchase order pops up. So under 9, the vendor that we're going to use is Stewart's or Fort's. The purchase order date that we're going to use is January 3rd. Now again, category details is an operating expense. All right. Item details if it's an inventory item. Okay. That's the difference between the two different details. So we are ordering some inventory items. So the first thing we're going to order is an 808, quantity 2. The next thing we're going to order is the California nose writer, and just a quantity of 1. Okay. All right. So once we have that entered, we're ready to go ahead and click save and close. Now, in real world, in real life, you would either print or put in an email address and click save and send, and it would automatically email it to your vendor. Okay, so here we're just going to click save and close. All right, so that is it when doing a purchase order. And again, purchase orders are what a business uses to formally order products or services from your vendors. You can also use purchase orders as a reference and a control for your products received. So if you remember back in Financial Accounting 1 when we talked about purchase orders, it's a great tool to use to verify what you've received. So you have your purchase order that you sent to your vendor, and you should have a copy of it as well. So when you actually receive your order from that vendor, you should be able to use that purchase order to verify that you received the right items. Okay, and then you'll be able to use that purchase order when you receive the bill from the vendor. You should be able to use that purchase order to ensure that they're billing you for the correct items. So that purchase order is used to make sure you receive the right order items, and then that purchase order is used to make sure that you're being billed for the right items. So they are definitely a great reference as well as a control for your products that you receive. So now let's talk about bills. Okay. So when chapter 4, when we were talking about customers, we called it an invoice. Okay, so we come up here, if we remember correctly, to plus new under customers, and we would create an invoice, and then we would send that invoice to our customers. All right. Well, now it's the flip side. We're the customer. We're the customer. So, so in QuickBooks, the terms of bills as being when we receive an invoice. All right. Invoice is when you send one. Bill is when you receive one. All right. It's still an invoice, but the difference in the terminology here, we're sending the invoice to a customer. Here, we're receiving an invoice from a customer. All right. So again, in chapter 4, we created invoices to customers for products or services rendered, and that invoice served as a bill to that customer, signifying a sell transaction for you and a bill to them. Okay. Likewise, when you enter into a business transaction, such as purchasing a product or a service from a vendor, you expect them to send you an invoice. Okay. So in QuickBooks, the invoice you receive from a vendor, we call a bill. And bills are recorded in QuickBooks to signify the receipt of a product or service. All right. And it creates a related liability, such as accounts payable. Okay. If it's inventory items that you ordered, then your inventory count is going to be affected when the bill represents, a product being delivered. In QuickBooks, the terms of those bills could be like one of the following. It could be due upon receipt, a net 10, a net 15, a net 30, or a net 50. The net reference means that the bill is due to be paid within a specific number of days, 10, 15, 30, 60, from the date of the invoice date or the bill date. So what we're going to do is we're going to focus on recording a bill for the receipts of services and products on account. All right, meaning you will have been given like specific terms, such as like usually net 30. So you will not have to pay the bill for 30 days after the bill date. The first bill, all right, was for a product received, which had been previously ordered using a purchase order. Right. So again, we talked about that. The purchase order, right, that we just did, that we sent to a vendor, right, was to order items. All right. So when you receive those items, you should also receive a copy of the invoice, which is a bill to us. All right. And so once we receive the items and receive the bill, then we want to enter it into QuickBooks stating that we received the items. All right. So what it does is it takes that purchase order and it pulls everything in that purchase order into a bill. All right. And if it's inventory items that you ordered on a purchase order, then it's going to increase your inventory, saying that you received that inventory. And now what you do is you have a payable. You've created a payable on your books. All right. You've increased your inventory with a debit to inventory asset. All right. And then you've credited accounts payable. All right. And now you have a payable, which is a bill that's going to be due based on your credit terms, whether it's net 10, 15, 30, or 60. So to record a bill from a vendor for the receipt of a product or services, all right, we can come up here to the plus new and come down here and click the bill, click bill in the vendor column. All right. So from here, you will select your vendor. So the first thing we're going to do is select our vendor, and it's step 10. We're on step 10. So the bill we're entering, is for Channel Islands. All right. So it says specifically, record a new bill based on a purchase order. So we're going to come up here. We see we have a purchase order, and it says purchase order 1001. All right. So that's what this is right here. Okay. Let's click on the more. Let's see what happens. We have different amounts, in the description. So it's not really providing any description on the items, and that's fine. All right, but we're going to go ahead and click add. So let's see what happens when we click, and we can go ahead and click open if you want to open the purchase order. So let's do that real quickly. Yeah, we'll leave without saving. If you want to open the purchase order, remember this is the purchase order that we just did. All right, we did this back in step 8. Okay, that's the purchase order we entered in step 8. All right, so we're going to close that out. Go back in here to the plus new and click on the bill. All right, so we're going to click on Channel Islands. And we'll click on Channel Islands because we have an open purchase order. We can just go ahead and click add. So what we're going to do is click add. All right. So now it's pulled over the purchase order into a bill. That's what it did. So it just pulled it into the bill. All right. So what we should have done in the real world is when we receive the items, we should pull up the purchase order used to order those items to verify we received the right items. Once we verify we received the right items, we should also have received an invoice from Channel Islands. So then we make sure that the items on the invoice also match what was on the purchase order. Once you verified that, now you're ready to pull that purchase order into a bill. So it's no longer a purchase order, it's now a bill. So now we need to come up here and we need to change our terms. So according to step 10, our terms are going to be net 15. Okay, and then the bill date is the 5th. Notice what happens on the due date. I'm going to change it. I'm going to go net 30. It changes the due date based on your credit terms. All right. So in other words, this invoice is due on 15 days of the bill date. Okay, and that's basically what it says. Due 15 days on the bill date. All right, so all items ordered were received. So we have down here. All right, so now again, what is this doing? It is creating a bill. So what we've done, what we're going to do is we're going to notice that our inventory, so here, like our fried rubble, right now we have a quantity of 0 on hand. We just ordered 5. So we should be able to, once we click save, we should be able to see that our quantity on hand is going to increase from 0 to 5. Here we have 8 on hand. We've ordered 4, so we should see the quantity go from 8 to 12. And here we had 7 on hand, so we should see our quantity go from 7 to 8. Okay, so we're going to go ahead and click save and close. All right, because now what I'm going to do is I'm going to go in, and I want you to see the products and services. All right, so see here that Fred Rubble, it now has 5. Our Rook 15 has 12, and our Water Hog has 8. So let's talk about the accounting side of what just happened. What just happened to our ledger? Okay, so we just debited our inventory asset account for $5,100, and we credited accounts payable for $5,100. So I'm going to show you how that looks. So let's go into accounting, and we're going to go to our chart of accounts. Okay. So here's our inventory asset. We can click the view register. All right. So right here, we have 3 items from Channel Islands. All right, this should equal 5,100. So we have 3,000 plus 1,600, which is 46, plus 500 is $5,100. So right here's your $5,100 that we just increased our inventory asset account by, because we see we have an increase. And it tells you what the offset is, because it's a bill. So your offset is accounts payable. Okay. I just wanted to show you by pulling up the register for our inventory asset account and see that by entering that bill, we increased our inventory asset account by $5,100. And we go down to accounts payable. We should also be able to see that we increased accounts payable. Right, here's our accounts payable account, view register. All right, and there right here is where we increased our accounts payable by $5,100. All right. Okay, now we're ready to do step 11. We're going to record yet another bill, but this time is without a purchase order. So we're going to come up to the plus new, scroll down to bill. All right. So this is a new vendor. So we're going to click add new vendor. So from the bill screen, we can add vendors. So the vendor we're going to add for step 11 is your San Diego Gas and Electric. So go ahead and click save. All right, so you know how I talked about that if it is an inventory item, we use item details. If it's an operating expense, we use category details. So in step 11, what we're doing is we're entering a bill for our utilities. So we're creating a payable for our utilities, essentially what we're doing. So we're going to come down here to category, and we're going to type in the word utilities. All right. Now notice utilities says is an expense account. So what's going to happen when we enter this bill, it's going to debit our expense account for utilities, and it's going to credit accounts payable because we're entering a bill. Okay. Now, we still have some information to enter. All right. Before we go any further, we need to correct our terms. So we also are going to use the terms net 15, and the bill date is the 8th. Okay. So we're creating a payable for our utilities to San Diego Gas and Electric, and our bill is due on the 23rd of January. All right. So from here, okay, so we've already selected our category, which is our utility expense account, and you could put in a quick description if you needed to. Like if you wanted to put in the dates of that bill, like this is your gas and electric bill from December 1st to December 31st. Okay, you maybe want to put that in your description. And then of course you want to obviously enter the amount, and the amount they have to enter is $145. So once you have this information entered, you just go ahead and click Save and Close. And so now we have the next bill. Now we're going to step 12. All right, we're going to do another bill without a purchase order. All right, so the first one we just did, recording a bill without a purchase order, it was for an expense, specifically a utility expense. It was an operating expense. It wasn't for an inventory item. All right, so number 12, step 12, we're going to record another bill, again, without a purchase order. So again, I'm going to plus new, click on bill. All right, and again, it's going to be adding a new vendor. Okay, and this time it is Prime Properties. I'm going to click Save. All right, under Prime Properties, it says go ahead and click Terms of Net 15. And your bill date is the 9th. So what is this bill for? All right, it is for rent. All right, it's for rent. And it looks like we are paying current and future rent, because it says here under category 1, we're going to use rent or lease for $2,500, and then category 2, we're going to select prepaid expenses for $5,000. So remember back in financial accounting 1, when we would do an entry like this. All right, basically that means that we are paying for we're paying in advance. We're prepaying our rent. We're paying it in advance. All right, and a prepaid expense is considered an asset. All right, so what we're doing here is we're going to we're paying Prime Properties a total of $7,500. $2,500 of it is for our current rent, and then $5,000 of it is for the next 2 months rent, and it would sit in prepaid until each month expires. And as each month expires, we would do one of those adjusting entries that we learned about in financial accounting, where we take it out of prepaid expense and we expense it to rent. Okay, so let's look at how we would do that. So let's go here. When it says category 1, it means we're going under category details, because again, we use category details to record our operating expenses. We use item details to record our inventory items. Okay, that's the difference between the two. So we're going to come up here and we're going to look for a rent expense account. And we're going to enter $2,500. All right, now it says category 2, we're going to use prepaid. So we will type in the word prepaid, and see prepaid is an asset account. Okay, and we're going to enter the amount $5,000. All right, so this would be your current month rent, and this will be prepaid for the next 2 months. So we're paying them a total of 3 months worth of rent with this one bill. Okay, and it's due on the 24th. So that's what we're doing here. And again, it sits in prepaid until that month expires. And once that month expires, we will do an adjusting entry. And we'll learn about those in a future chapter. We'll do those in a future chapter. We take it out of prepaid and we move it to our actual expense account. So we'll go ahead and click Save and Close. And now that bill has been saved. All right, so now we're on to step 13. Now we're going to talk about paying bills. Okay, paying bills. So, so here we're going to focus on recording the payment of a bill for either receipt of services and or products on account. All right, and we're also going to talk about recording credit card charges and recording the payment by check for other items. So we're going to do all of that here when we talk about payment of bills. All right, then remember I told you earlier when we talked about credit card. All right, yeah, I mean, a lot of students get really hung up on that one, so I really want y'all to pay attention to how we record the use of a credit card. Okay, not payment of a credit card, use of a credit card. So it's very, very different. All right, it's very, very different. So, all right, so again, here's our AP register, which is our AP ledger. Register and ledger, by the way, are synonymous terms in accounting. And we can see all of the bills that we've entered so far. All right, so now let's talk about paying a bill. How do we pay a bill? All right, let's come here to the plus new. And under vendors, we see pay bills. Pay bills. So here we have a list of payables, all right, that we can pay. And their list of due dates, and then the amounts. We have who the payment is to, what are the due dates, and what are the amounts. All right, so what bill are we paying? All right, so step 13, it says pay all bills due to Channel Islands. All right, all bills due to Channel Islands. We have two. So we just come over here and click both those. All right, make sure you're using the correct account. So you want to make sure when you select checking, okay? All right. And so this is one way to do it. I'm not going to complete it this way, but this is one way to do it. Now, next you want to change the payment date. So here it says pay all bills due to Channel Islands on the 19th. So we'll make sure we change the payment date for the 19th. And here you would just click save. All right, but I want to show you a different way to do it. There is a different way to do it, and I want to show you a different way to do it. So again, you can go up here to click pay bills. Make sure you select the correct payment account. So it should be our checking account, the payment date, and then starting check number. And it tells you to use check number 1001. Okay. And then you would just put a check by the items you want to pay, and then you click save. Click save. But I want to show you really quickly another way to do it. So I'm going to exit out. But this is the steps you would do, and you just literally just click save. But I want to show you a different way to do it, because there's always more than one way to do it. So we can come over here to expenses, and we can come over here to bills. Okay, it says no bills. Okay, that's weird. Okay, here we go. So here are some of our unpaid bills that we can look at. Another way we can do it is we can go down to vendors. All right, and we see Channel Islands, right here, and you can select make payment. All right, and it'll show the journal entry that we did plus the bill that we set up. Make sure we select checking. Change the date to the 19th. And reference number would be check number. And then click save and close. So those are the two ways that you can record payment for some bills. All right, the bill payment is then saved. All right, that was step 13. Next, we want to record a credit card charge. How do we record a credit card charge? Well, that's different. Not the way you think. To record a credit card charge, all right, you're going to go to the plus new. All right, now, why you're going to want to click this? All right, it says credit card credit, not credit card charge. Okay, let's think about this for a minute. Do not click on that. When you click on that, you are recording a credit to your credit card, not a charge. They're two different transactions. All right, we are wanting to record a credit card charge. So what has happened? We went out, we were running errands, and we had to put gas in our vehicle. All right, so we used our business credit card to put gas in our car. Now that we're back in the office, we take that credit card receipt and we give it to our accountant, okay? And our accountant now needs to record that credit card charge to the book. All right, so let me show you how to do that. You do not click on credit card credit. You come up here and you click on expense. Click on expense. All right, payee. Who do you pay? Payment account. Okay, and this is all very important. All right, so let's look at our instructions. So for number 14, we record a credit card charge to Village Travel. Put that out. Village Travel. That's the vendor we're going to use. All right, and we used our Visa. So we come down here and we click on Visa. Remember that credit card we created? Visa. So, all right, sorry. So I'm just reading this up, make sure I remember. So what did we do? All right, so then what is the payment date? The payment date is the 10th. So we need to change the date to the 10th. What was your payment method? Credit card. Okay, credit card. It doesn't give us a reference number, that's fine. All right, so now we need to ask ourselves, what did we buy? So again, we have category details and we have item details. All right, same concept applies under expense. Category details are your operating expenses. Item details will be your inventory items. So yes, you could use your credit card to purchase inventory items from a vendor. How would you record it? Same way we're doing here. You would use the expense function and you would use item details and select what inventory items you purchased. All right. But that's not the case here. The case here is we are going to use category details. All right, because what we purchased is going to be a travel expense. All right, so we should be able to just come in here and look for travel. And we want to specifically select travel expense. And of course, you could put in a description, whatever description, and I always say whenever you're doing these things, always do a description, always do a description. So you could say something like, purchase travel for conference, upcoming conference, blah, 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 blah. Okay. And then of course the amount. So the amount is going to be $1,800. So again, what are we doing? We are recording a credit card charge. So you don't use credit card credits when you are recording a charge, because credit and charge are two different transactions. I can't say that enough. So you use the expense function. You just select your payee and you select the payment account, which is Visa, the payment date, the payment method, which would be credit card. All right. And then depending on what you purchased with your credit card will determine if you use category detail or item detail. Here we did a travel. We're recording a travel expense. All right. So we're going to use category details. And we selected the travel expense account and we entered the amount. So now we're ready to click save and close. And that is how you record a credit card charge. Next, we want to record a check. We're going to record a check. So how do we record a check? And what do we use checks for? All right. So again, you could, you're just recording purchases. That's all you're doing. So we just recorded a credit card purchase, which was also a credit card charge. So we purchased travel. Okay, we paid for some travel using our credit card. So now we're going to record a purchase we made using our checkbook. So I'm going to come up here to plus new, under vendors, you select check. Okay, so check. All right, so now we're on step number 15. It says record check on the 11th. So we're going to change the date to the 11th. It says we're going to record check number 1002. And the vendor is Office Depot. And we're going to make sure we select our checking account. Okay, remember, if you see something up here and it's got a zero balance, that should be a red flag. That means you need to select the correct bank account, which is checking. All right, and what did we do? We purchased some supplies. All right, so so again, it's an operating, it's going to go under category detail because it's not an inventory item. Supply assets are not technically considered an inventory item because we don't enter them as a trackable inventory. All right, so we're going to come up here to the category. All right, so not item, we're going to use category and type in the word supplies. And we want to make sure that we select the supply asset account. Okay, not the expense, but asset. Because remember, when it comes to supplies, when you purchase supplies, they're recorded as an asset. As we use the supplies, all right, then the supply asset account is reduced by the amount that was used, and it's recorded as an expense. Remember, that's adjusting entry that we did in financial account. So we're going to select our supply asset and then enter the amount of the purchase. All right, now we can go ahead and click save and close. And that's recording a check. That's all you do to record a check. So we wrote that check to the Office Depot, and now we come back to the office and we're recording that purchase that we made. That's what we're doing. We're just basically recording the purchase, just like with the credit card. We were out and about doing business. We went in and paid for our travel using our credit card. So now we're back in the office and we got to record that transaction. Well, we were at Office Depot. We purchased some supplies. We wrote a check for it. Now we're back in the office and we've got to record that purchase. All right. All right, so now we're ready to do our trial balance. That is it. That's all we're doing. All right, so now we're ready to do our trial balance. Make sure our trial balance matches what the figure 5.20 says in your case study. So to do that, we're going to come to reports. All right, go ahead and click on trial balance. When you first click on it, it's always going to pull it up as of whatever today's date is. You should have no transactions. You should have no transactions. That's why we use future dates, by the way. That's why we use future dates, so we can make sure that we are dating our transactions properly. Okay, so if you have anything showing up here, that's a red flag, and it needs to be corrected. And I would be glad to help you correct anything that's showing up here. So if you click on trial balance and you have transactions as of current date, those need to be fixed, and I'll be glad to help you with that. So let's go ahead and change our dates. So again, we use future dates for that reason. Okay, so that's your date range to go ahead and use, and go ahead and click Run Report. All right, so now what we want to do is we're going to compare this to your case 1 trial balance and your homework assignment. So you want to make sure that each account is carrying the correct balance. Okay, so if you entered that credit card charge as a credit card credit, all right, this is going to show up as a payable. It's going to show up as a credit over here. Actually, it's going to, let me show up as payable. All right, it's going to show up as credit. So it's not going to show up like this. So you want the Visa to be a payable, because that's what Visa is. Your Visa is a payable, and it's why it's being entered as a credit. And the Visa payable was to pay for your travel expense. All right, so if you do credit card credit, it's not going to show up like this on your trial balance. It's going to be wrong. So I want to make sure everybody knows when you are recording a credit card charge, you use the expense function and not the credit card credit. So a credit card credit and a credit card charge are 2 different transactions. We're going to drive that home. All right. We should also see our rent expense as well as an increase to our prepaid expense account. We now should have supply asset. See here, our inventory assets should have increased, as well as our accounts payable should have increased. And then we have a utilities that we bill that we entered. All right, so right now the only payment of course was to Channel Islands. So we should so that reduced our accounts payable as well as our checking account balance. All right, so now if you're looking at your trial balance and comparing it to the one in your case 1 homework assignment and the one in your accounts are off, all right, what can you do? Remember, every time you move your mouse over the amount, what happens? It creates a hyperlink. All right, so you click on that hyperlink, and when you click on that hyperlink, it creates a transaction report. All right, so I like to go to Classic View. So I'm going to switch to Classic View. All right, so now you can see all the transactions that have hit that particular account. All right, so we see the initial $25,000 that we used to open up our account. All right, we see that it's a payment that we did in Chapter 4 from Blondie's Boards. All right, we show the check that we wrote to Office Depot, as well as the check that we wrote to Channel Islands. Okay, so if yours doesn't look like this, then you know something's off. All right, so if that's the case, and let me show you what happens. So let's say this is only like a portion of it, like you didn't select both the journal entry as well as the purchase order of your Channel Island. Okay, so this amount off, so you can click on that. All right, and it's going to take you to the bill payment that you recorded. All right, so let's say it was off and you realize, oh, you only selected the bill, you didn't select the journal entry, because you see down here it's just the bill showing and not the journal entry. All right, well, you can just go in and create another bill, or you can try and modify this one, which I'll be glad to walk you through on how to do it. Okay, so like, you can come over here and try and make changes. All right, so what I did was I zeroed that out. You can try and make changes to it. I'll be glad to walk you through it. I'm not going to try and do it here, so I'm just going to exit out. Yes, I'm going to leave it off saving, so I don't want to change anything. But you can modify it. You can modify it, and I'll be glad to walk you through on how to do it. You can, if you realize you didn't pull everything in for this bill, you can create a second bill. Just go in and create a second bill to pull it all in. So there are many ways we can fix it, and I'll be glad to walk you through if there's any errors. That's just an example of it. Okay. Now remember, when you are doing your reports and you're submitting them for your homework assignment, right? I know it says in the homework assignment, because this homework assignment that's uploaded in Blackboard, that came straight out of your textbook, straight out of your textbook. So if you were to go to the end of your chapter 5, to your chapter 5 questions, excuse me, and go specifically to chapter 5 cases, all right, and you go to case 1, yes, it's going to tell you to export it probably as an Excel, all right, but I'm telling you not to export it as an Excel, because if you try to export it as an Excel and upload it, it's going to give you, all your values are going to be 0. All right, so as I've said earlier in earlier videos, do not export as Excel. Please export to PDF. All right. So I hope this helps you guys. You should be able to now do your case 1, easy peasy. And then the steps in your case 2 are very similar to those in your case 1. So you should be able to do both assignments pretty easy now. Again, if you come across any problems, if something looks a little different on your screen than it does on my screen, please shoot me an email and I will go in and I'll try to take a look at it. And I will definitely try my best to walk you through how to troubleshoot whatever issues you may not be having. All right. So take care. Have a great week. And I will talk to you guys next chapter.